All right, we have a lot to talk about. We have to start off with one thing that seems to be really influence the markets. That's tariffs. How are tariffs potentially going to impact your business? You're a Japanese-based company. The U.S. and Japan have generally a kind of a friendly trade situation. But does it impact your customers and then, by default, your business as well?
No, it doesn't impact our business at all. In fact, in the medium term, it might actually be positive. So, we're a $30 billion IT services and infrastructure company. And broadly in data center business, where we are the world's third largest, excluding the Chinese companies, and in technology services, where we provide consulting, systems integration, implementation, and managed services. And if you look at our data center business, the tariffs really do not impact us. We have mechanical and electrical equipment providers in our supply chain who potentially could be impacted and may need to reconfigure the supply chains. But we have globally standard products. We have long-term strategic supplier agreements with them, and we have global scale. So we think we can navigate that pretty easily. And then on the aluminum and steel side, where we do construction of data centers, they're a pretty small percentage. Steel is less than 2% of the construction cost of a data center, so we don't think there's a big impact there either. On the technology services side, of course, we serve a variety of different industries and different clients. And there are some industries that may be more impacted in the short term, like manufacturing, automotive, et cetera. But we do think that all of them will be able to navigate that. There's a bit of a wait and see approach right now. And as a technology company, they're looking for technology solutions from us. So we think we can navigate that pretty well.
All right, by the way, on the manufacturing side, some of your customers are BMW, Volkswagen, for example, also not quite manufacturing, but L'Oreal, people that make things that get imported to the U.S. So you're saying there is some potential impact to those type of customers and then potentially an impact to your business.
It could, but actually they will, as soon as there's a new normal, the worst thing actually is uncertainty, because that reduces the discretionary spend. But there will be a new normal pretty soon, and I hope the period of uncertainty gets over pretty quickly. And then all of them will look for technology solutions in terms of reconfiguring their supply chain and their manufacturing operations. And that, for a technology services company like us, is a net positive.
All right. What about DeepSeek? It happened on January 27th. We've heard a lot of differing views on it. A lot of people throw out this term Jevons paradox, the fact that things are getting cheaper, it's going to increase consumption. What's the impact on your business? Again, one of the biggest data center providers globally right now. Are you seeing any changes in demand or what your customers are at least looking for?
We have seen no change, Frank. So, in fact, we think DeepSeek actually is a very good thing for the industry overall, because it's in keeping with our overall philosophy that we need to democratize AI. We need to reduce the unit cost, and we need to move to a lot more inferencing than training, because the real value creation for enterprises happens when you have domain-specific medium language, small language models. So all of that is a net positive for the industry, we believe. And we do believe in the Jevons paradox, which is that it will unlock more enterprise demand and pull forward demand, both of which are positive for our data center business, where we are really focused on cloud enterprise workloads and AI workloads that are inference specific in tier 1 and tier 2 markets. And even in our technology services business, where there will be a higher demand from enterprise customers for AI consulting and implementation of AI applications.
Okay, so higher demand for consulting. You see it as a net positive, even though there's been some disruption. I want to get a bit granular. I know you're not a stock analyst, and I'm not saying that you are, but of course, upcoming tomorrow, we have NVIDIA earnings. When you're talking to your customers, has the view on NVIDIA's, specialized AI chips, has that changed? Are some of the customers that you're talking to, do they see opportunities just using other chips? Your company itself, do you see it as just being kind of a wider picture following DeepSeek, that you can actually use other chips and NVIDIA doesn't have quite the moat that we've thought it had before?
Well, we are always open to alternative architectures, and I think as the world moves to inferencing, we will likely see other chip architectures, which we are pretty open to. Again, it's all about reducing the unit cost economics of inferencing. That said, we are still in a pretty supply-constrained environment as of now. The demand far outstrips supply. And for us, what's really important is that eventually we see a lot more private AI clouds and sovereign AI clouds. And I think as the supply situation gets better, I think that's a net positive for us as well.
All right. We're almost out of time. Big rise in the dollar year to date, actually, over the last year. How is that impacting business? We haven't heard as many companies talk about it on the back end of earnings season, but does that impact your business? And if so, how?
It absolutely impacts our business. We operate in 70 countries, 70 plus countries, and so the Forex impact on our business is pretty material. We do report in Japanese yen, which actually historically has been pretty positive for us, but especially the Latin American currencies do drag us down. But in FY25, we expect some positive movement in that direction.